Well, I think the first point to make, if one were talking to the incoming Biden administration, is don't just copy what the Chinese are doing. We shouldn't be about trying to create our own central bank digital currency, which can put all transactions of Americans under direct surveillance. In Cold War One, the danger was always that we became like our enemies. That was a recurrent theme of much Cold War literature, and I think it's just as true in Cold War Two. Secondly, the tradition in American finance has been decentralization. The American banking system, even today, after the concentration we've seen in the last 10 years, is still a more decentralized system than Canada's or most European banking systems, where a very few big banks dominate the landscape. And by design, the United States has evolved or tried to evolve a more decentralized system. And also, at its core, the United States is an experiment in individual liberty. That's the whole point of how the founders designed the republic. And so we shouldn't unconsciously submit to an essentially totalitarian model in which, by default, all transactions are transparent to the authorities. That's really not the way it's supposed to work. The way it's supposed to work in a free society is that if we are engaged in law-abiding activities, then we should have privacy. It's none of the state's business. And the state should only really be able to stick its nose into our financial affairs if there is reasonable reason to think that something nefarious is going on. So why reinvent the wheel? We actually now have in Bitcoin a system of blockchain-based payments that has stood the test of more than 10 years, which is handling a rising volume of transactions, a smaller and smaller share of which are illicit, because actually Bitcoin's not very good for criminal activity. And so why would we go to the trouble of creating something new when something that already works exists? As I said earlier, there are some interesting resemblances between Bitcoin and gold. And Bitcoin isn't handy for small transactions any more than gold was. What did gold do? Well, in the period from the later 17th century until 1971, it became the anchor for an international monetary system that was notable for its lack of inflation, and that was the gold standard. And the thought that I was playing with at the end of that Bloomberg opinion piece was, well, maybe we should think of Bitcoin as a new kind of reserve asset, one that we can depend on not to be debased because it's programmed not to be inflated. It's fixed. That's the point about being something that is in finite supply in a world of overabundance, which is characteristic of the internet. And Bitcoin has this sovereignty. That's a term I owe to my good friend Wences Casares, one of the great Bitcoin investors, who's taught me a lot since we became friends a couple of years ago. Now, sovereignty is a relative concept. There really is no absolute sovereignty in an international system, as, by the way, my fellow Brits are going to discover after Brexit. But relative sovereignty is still a pretty attractive thing. Compared with Chinese payments platforms or the central bank digital currency, which are not sovereign at all, they're entirely under the control of the Chinese Communist Party, Bitcoin gives us at least some autonomy, so that if the IRS wants to see my Bitcoin holdings, if it wants to go to Coinbase and demand disclosure, it's not that easy. They actually have to go to court. So I think that relative sovereignty is an extremely important feature. So my hypothesis is, does Bitcoin have a future as a reserve asset? Some companies are already clearly thinking that way. And I wonder if ultimately there's a way to make that a feature and not just some bug in the international or at least in the US system. At the same time, of course, and we haven't talked about it, there's Libra. Now, a little anecdote here. When I first got to know Wences Casares, I was actually giving a talk at a birthday party of his. at the invitation of his friend Mickey Malka. And this was before Libra had been unveiled. And I gave a talk about what I saw as the future of money. And one of the things I said in that talk was, for heaven's sake, the one thing we must not do is allow one of the big tech companies, especially not Facebook, to create a digital currency. And the room was full of insiders who knew, and I didn't know, that was exactly what was going to happen. Now, Libra, I think, started with all kinds of problems, mostly arising from Facebook's compromised reputation post-2016. And my own sense is that Libra is going to be far more a target of regulators, and that's already very clear from recent statements, not least by the German finance minister, than Bitcoin. So if you ask me, which would I like to see as the standard 5 years from now in a Western system of finance, or at least an American system of finance that is characterized by decentralization and relative privacy, then I'd probably go with Bitcoin over Libra, but not least because Bitcoin's been around for 10 plus years, and Libra is still somewhere around the launchpad after multiple redesigns. So yeah, that's how I was thinking. It's a little bit early to know quite how this works, because everything hinges in the end on regulators and legislators. And as I've come to realize over the last few years, since I tried to write and talk about these issues, they are by and large not well informed and instinctively suspicious of any kind of innovation. And I think the great tension at the moment in the world is between the smart investors, the Druckenmillers, who want to adopt Bitcoin and start to think of it as not just a security, but a distinctive kind of digital gold. And on the other side, regulators whose knee-jerk response is, as the German finance minister Olaf Scholz said this week, that we must do nothing to compromise the state's monopoly on money. Now, whenever governments say the words monopoly and money in the same sentence, I do think of monopoly money. And when you think about the way in which governments have been printing money with monetary growth rates, in the case of the US, M2 and M3 north of 20% per annum, you do have to ask yourself if there is actually some law of nature that says that the state should have a monopoly on money. And it doesn't actually. There's no such historical law. The state has a relationship to money, that's for sure, because the state can determine which money is acceptable as legal tender, which money is acceptable to pay taxes, that's for sure. But historically, it's not the case that governments have had a complete monopoly on the issuance of money. And it's not even true today, because most dollars are created by the banking system, not by the Fed, but by the private sector banking system. So yeah, I think that's the sort of tug of war we're going to see in the coming years between smart investors who get what Bitcoin has to offer, and not so smart regulators who think that it poses some kind of existential threat to their right to run the printing press.